8%. Singapore was down 8%, and of course the sell-offs that we are seeing in Europe today, most of those markets down about 8 or 9% as well. The concerns continue to be the deleveraging that we are seeing around the world by hedge funds and other investors, the recessionary fears that were brought to the fore today by the fact that the UK, its economy contracted for the first time in 16 years in the third quarter. Add to that the news that we're getting out of not only corporate of America, but corporations around the world. Toyota, poor sales in the U.S., basically causing it to cut its forecast for the full year. Sony also under pressure. Both of these, of course, Japanese currency companies, and of course the numbers or the warnings that we've been getting out of a number of U.S. companies as well today. Couple of points to watch today. 839.80 on the S&P 500. That was October 10th intraday low. A number of traders watching that. And just an indication on National City being acquired by PNC, down 88 cents at $1.86. The Dow Jones Industrial Average off 384 points. Now let's get a check on the NASDAQ with Scott Wapner. Scott?
All right, Mary, thanks so much. And just a note on those circuit breakers, just want to point out here that the NASDAQ does use the same circuit breaker as the NYSE in case there was any question regarding that. NASDAQ, as we said, fully open, down 6%. That is a loss of 100 points. Just let me also point out that the Friars Club did the open this morning. I don't know if it's a good morning for a laugh or not. Perhaps we all going to need one after the day today. But let's take a look at the big cap technology stocks here. Microsoft certainly set up for a down day after that disappointing outlook, talking about a slow economy and the impact there, slow spending, PC unit growth slower than expected, et cetera, et cetera. You get the picture there. eBay is down 6.5%, and really you're seeing just broad-based declines across all of the major technology sectors. Apple's under pressure, Yahoo down 8.5%, Cisco 6.5%, Research in Motion 10%. I'd like to go through these in case some of you are actually listening on the radio right now, so you get a feel of really where the kind of selling we're hearing about now. Google 7%, Intel is weak. I've been looking at the Philadelphia Semiconductor Index for weeks now because it's dictated the trading here. We're down 6.5% on the stocks right now. Let's go down to the NYMEX.
Oil down more than $4. Traders here working the phone say a lot of their customers are freaked out, waiting to see how low the Dow will go. They're focused on the Dow, not so focused on OPEC. Yes, OPEC did cut production by 1.5 million barrels per day, but it wasn't enough to stem the slide. The slide is due today to what we're seeing in the global equities markets, and that's what these traders are focused on. They're looking at the slide in stocks around the globe, and oil is falling as well. But I must note that since the Dow has opened, we are not on the lows of the session. Oil had actually fallen below $63 a barrel. We are off of those lows, but still down $4.40 here at the NYMEX. A lot of folks in the developed countries are saying that OPEC cut should never have happened. The International Energy Agency is saying that it's going to do more harm than good to the world economies. Rick Santelli, over to you in Chicago.
Well, thank you, Sharon. You know, a lot of traders down here are actually amazed and impressed that the markets didn't do actually worse. The spiders were fairly accurate in where they priced pre-opening. If you look at what the lows in the S&Ps are, which right now we're still 10 points above, but everything's happening fast. Interest rates right on the opening at the lowest prices for equities actually saw their yields move up a bit and their price move down, which also makes sense because many people this morning, due to the uncertainty of equities, the wide bid-offer spreads, the lack of big places to trade with big volume, well, they hunkered down in there. Now some of those buys are moving and doing what they need to do in equities, pulling those out. But let's be clear, things like a 30-year bond, which had some very strange anomalies yesterday in the 30-year swaps, was a prescient indicator. 30-year yields, for many reasons, are now at the lowest level, or were at the lowest level they've ever been at. Mark Haynes, back to you.
Well, I think 30 Dow stocks open. The Dow is down 436 points. I don't know whether all 500 of the S&P stocks are open. It is down 47 3/4. The futures are pretty much, after a big dip down to minus 68 or so, they are back to more or less minus 60. It's an extremely volatile situation. NASDAQ Composite has come off its lows, down 86.
Are we back?
Yes, we are.
We are back, and we are ready for these bells. Mark, we wanted to just zip through with everybody before we open to give people a sense of the, actually, we're going to go now.